Hello guys, so as promised from our previous video that I will give you the ledger or the application for the general ledger of those what we have journalized in the previous video. So here is our ledger. First and foremost, let's discuss its part. Then we have the topmost part here, which state the general ledger. Then the sheet, usually the sheet, if you were in a business industry, each page would usually one sheet for each on the accounts. And usually in businesses there are already the account, and you can distinguish it for the first number could be indicating an asset, and then the next 2-digit would determine the accounts under that assets. So we have the dates to determine the date of the transactions. We also have the details or the particular. So this one tell us what's the transactions all about. So we could also have that in the journal. And then we have reference. This tell us the page of the primary or from where book we get this particular entry. And then we have the debits and credits. We have the debits and credits. So since we said that cash is normal balance is debit, and we know that cash are resources of the entity, so normal balance and its assets, so normal balance is debit. And it's deducted for the credit size. That's why if you could see it was deducted. Okay, we put the balance so that we would determine how much is the debit already. Okay, so let's proceed. So from our previous discussion, we said that cash and then lay capital. So we check cash. You could see that cash was this one there. Capital investment, date January 1, and then we have J1, 10,000. 10,000. Did you see? So here it is. So we have now cash, capital, that's capital investment, 100,000. And then we had the balance of, and then we have lay capital. Lay capital at how much? We have lay capital at also 100,000. But take note, it's a credit. Why? Because capital is an equity, and we said that the normal balance of the equity is in a credit. So we have now 100,000. Okay? We have 100,000. Next, we have prepaid rent. But take note, it's a prepayment. As we have said before, it's not yet expenses. So we have now in here our 3. We have advance rent, 30,000. And what do we use to pay? We pay it in cash. There, in cash. See it? We pay it in cash, 30. And so, you will see the advance rent, 30, it's a deduction. You see, it's a deduction. So, it's now 70. So, we only have 70. Next, we go for our unearned revenue. We have cash, February. Then, if you would check on this one, we also have February 25 for services not yet rendered. We receive 50,000. So, we have now the balance of 120 for cash. Then, we have the unearned. So, the unearned, we also have 25 date. And then, the service unrendered, 50,000 credit. So, we still have the balance of 50,000 credit. Okay? Next, we have for the receivables. We have receivables. We have now 25,000. We received that from whom? From Google Philippines. Why? Because from the transaction, it was not yet paid. The service was just being rented. So, we have now accounts receivable. Services not yet collected. 25,000. Balance 25,000. And then we have now service. So that's revenue already because we already rendered, right? Rendered, but not collected. There, 25,000. So we already now have 75,000. Okay. Next we have the payment of supplies. So we purchase supplies for 50,000. So we look now for our supplies account. It's here, supplies. You see it? So it's March. Purchase supplies, J1, still J1 because you're, and then 5,000, balance 5,000. What do we use to pay? Cash. So you would see this purchase of supplies 5,000. So we have now balance of cash at 115,000. Okay? And then you could just do so forth and so. So here is now our okay. You get it, guys? So if you like, don't you forget